All right, what's going on out there, traders? Another one here from the Dark Side family. Hope this video finds you well. And in this particular video, I want to talk a bit about Wyckoff. I've realized how we haven't spoke about that at all on this YouTube channel, and I definitely think it is important to at least understand Wyckoff and what it means, how to use it, where to use it, so on and so forth. And I do think that there is a lot of benefits to understanding these schematics. Now, as usual, everything we share here can be utilized on any type of strategy, whether it's smart money, supply and demand, Fibonacci, trend lines, support and resistance, etc. This again, everything has its point in the market. Everything has its reason in the market. So to me, a Wyckoff schematic is just as useful as understanding an imbalance or an order block or a fib level or a trend line. Everything works sometimes, and the more you understand when everything works, the better off you are. So let's get right into it. Now, for those who don't know, an accumulation schematic and a distribution schematic, these are the two I'm holding up here. You could easily find these on Google Images. These are not anything special, but they come from the workings of Richard Wyckoff, which was a trader from way back in the day that used to use these ideas in stock trading. Now, I do think that there is a significant difference in stock market trading compared to Forex, but I do think there's a lot of similarities. But through back testing, you'll be able to figure those things out for yourself too. But what I'm trying to get at is that an accumulation schematic is basically something that you're going to look for when price is looking to enter your zone. Now, again, depending on your strategy, this could be an order block, this could be an imbalance, this could be a Fibonacci level, this could be a demand level. It really doesn't matter what it is. But the idea is that price is approaching your zone, and then you would look for an accumulation schematic, okay, just like that picture there. You would look for something like that to develop right around your zone. Okay, this would be your accumulation schematic, because what you're anticipating is that price is going to accumulate orders in this area and then continue into the same direction. Now, the distribution is obviously the inverse of that, where you would be anticipating a sell opportunity and you would be watching price approach your zone, whether that be an order block, Fibonacci level, supply and demand level, a trend line, a resistance level. It really doesn't matter. The idea is that you're looking for this to develop before price hits your zone. Okay, so you would be looking for your distribution schematic where you're anticipating price to once again consolidate and then distribute to the downside. Okay. Now, what I really like about schematics, especially for people who get caught in the market a little too early, and I think that's one of the biggest problems with people who trade. I mean, obviously, I've been through that before too, where you get in too early, and you know how it is. The first person in is usually the first person to be taken out, especially with all the manipulation that we see happening these days. So let's do a quick example of a distribution schematic and how I think you can utilize this into your trading immediately. And I think what it does for you is it helps promote patience. And if you know me by now, my main thing in trading is patience, not strategy. It doesn't matter how you trade or what you trade, it's patience. Because if you just wait long enough, you could really put yourself in a much better position than when you get in too early. And I'm sure all of you know that by now. So for the sake of this example, let's just use this zone right here. And we'll call this, again, it doesn't matter. We'll call this an order block, maybe an imbalance, maybe a Fibonacci level. Let's just call it a 61.8, for example. I know that's a very popular one. So let's just call this a 61.8 fib level or an order block or an imbalance. Again, it doesn't matter what it is. It's your style of trading. You can call this what you want. People call them different things, but they all have the same meaning. The idea is that whether you're an order block, imbalance, fib trader, or even a trend line trader, the idea is simple. You're waiting for price to visit this zone to change directions. So you can call it whatever you want. You understand? So again, just to go back to the point here on what I like about schematics. What I really enjoy about these, especially for guys who are in too early, which I'd imagine the majority of people are, is when if you're looking to use a schematic, for example, okay, and you see price approach your zone. All right. Now we're going to follow right exactly off this schematic. Let's change the color up. If we're looking for example, at BC, right? This is the buying climax. The next one would be the automatic rally. Now, I do encourage you to Google these, do your homework, look up the PSY, the BC, the AR, and define each one of them in your own words so that you have it and you can have a better, deeper understanding of what's taking place here. Because again, the better you know something, the better you can utilize it in your trading. So let's just anticipate this being the BC right here, okay? Let's say this first touch right here is the BC. Now, most of the time, a lot of traders are going to immediately get into a position right here. They're looking for very simple things that's going to anticipate them having a change in direction for price, so they're looking to sell the market. This is where a lot of manipulation and frustration takes place. If you look at our previous videos, you'll see that. Now, if you're waiting for the BC, okay, and in other words, you're not looking to sell until you reach your UTAD, all right, which is the highest point, which is the final area where price then sells off to the downside. This is where you would look to sell after the UTAD is complete or somewhere in these LPSYs, these signs of weakness as price decreases. So if you're waiting for your UTAD and you're considering the first touch, your BC, what it's going to do is it's going to help you stay away from getting in the market first right here. A lot of people like to see what? They like to see a low time frame break of structure where they think that they're the only people looking for this and they can enter the market short right here. I don't even have to explain that because I'm sure that's what you do, and I'm sure you realize that a lot of the times it does this and it takes you out. Okay, so avoiding that first step of manipulation is a big, big advantage because that leaves you out of a position you don't want to be involved with, right? So if you're waiting for BC, price comes down, okay? Now you're following your schematic. Now you're looking at AR, all right? So once this happens, you can anticipate price returning into that zone. A lot of people will freak out, think they missed the move. That's the FOMO kicking in. That's intentional. That's designed to make you enter the market at the wrong time. Okay, so if you're waiting for your schematic, you're not looking to sell anytime here. You're following a schematic, all right? So when price, you have your ST, then you have a little break, then you have a UT. I'm just going to kind of go through it quickly. But if you look at the UT, you can see that the UT is actually a higher high than this BC right here, than this previous one. Okay, so what that means is that if price comes back up into here, okay, and you're now looking at it as your UT, all right, your upward thrust, you can see that if you did take this initial sell right here, you would now be in drawdown as prices exceeded your position, and you're now in drawdown. Hopefully you didn't put your stop too tight. You're not getting stopped out from that, but you see what I'm getting at, okay? It would have prevented you from being in here if you would have just been following your schematic. Now, based off this, we'll see the UT comes to the downside, so we'll just follow along with that. Again, this is a regular simple schematic that you can find anywhere, and there's distribution, there's redistributions, all kinds of them to study, and you could see that price would then come down to the downside, But again, instead of having FOMO and thinking you're missing the move because you're seeing the sell-off, you're following your schematic. You're being more patient so that when price does come down like it just did, you're not freaking out. You understand that this is probably not going to be the move just yet. So you're waiting on your UTAD, okay? Now, if you look, the UTAD essentially is the highest point out of all of these. In other words, it sweeps these highs that were just created by the two previous levels. You see, so the UTAD, again, if it's going to sweep these previous highs like we just spoke about, these previous highs, just like we illustrated right here, okay, if it's sweeping those, again, if you sold from here, you're in drawdown. If you sold from here, you're in drawdown because price is exceeding these highs. It's pushing up higher, okay? So now, if you're looking to enter the market, at least you have a lot more confidence when price does melt to the downside that this is now not just a move, but it's actually the move that you want to be involved with. And all you're doing is following a simple schematic. You understand? So if you have your UTAD take place, you've got your BC, okay? You've got your BC right here. You've got your UTAD right here. I'm sorry, your UT, your upward thrust. And then finally, your UTAD taking place. And then you see some downward price action, some descending price action, some descending order flow, whatever you want to call it. Now it would be a lot safer to look to enter the market because there's a good chance that the manipulation and the frustration are now done. Okay, so this will help you stay away from the market or getting in prematurely just by following a simple schematic. And that's what I like about these things. They help encourage patience. They help give you more than just, I need a bearish engulfing, I need a low time breakup structure. I need they give you something more to pay attention to, because at the end of the day, this is how the market moves. These are legitimate. Now, listen, I mean, bottom line, a schematic is not going to change your life. A distribution schematic, understanding Wyckoff, it's just like anything else. When you trade retail, then you hear about smart money. You think you found the holy grail. When you trade trend lines, you find out about Fibonacci levels. You think you found the holy grail. It's the same thing. Wyckoff is not everything, but it's another piece of the puzzle that you need to put together. I will never underestimate the power of anything when it comes to trading, whether that be a strategy like smart money or supply and demand, or whether that be a schematic system like Wyckoff. To me, they're all relevant. You have to learn how to make them work for you. That's what it's all about. They got to work for you. And again, the more you know, the better off you are. And I think this simple thing right here will help everybody who keeps getting tapped out too early. If they just follow along a schematic, I think it's going to improve your patience so much. And I think patience is one of the biggest things missing, because at the end of the day, at this point, most of the people who watch our channel, you guys know how to trade at this point, and it's not necessarily, what is an order block, what is an imbalance, what is a trend line. You guys understand that. You're seeing the manipulation, and now it's learning how to avoid that, by still using your same strategy. Because again, if we just go down a little deeper here, it has nothing to do with whether it's an order block or a Fibonacci level, because you can look for these schematics anywhere. So if you're a Fibonacci trader, everybody loves to criticize retail traders or Fibonacci traders and stuff like that, which is I don't know why they do that. There's no strategy that's better than the other. But in other words, if you're watching this, right, and price breaks down and you trade support and resistance, you trade retail, and price comes up to your 61.8 level, okay? Let's just get rid of the 50% fib level for this example, and we'll focus on 61.8. Now, a retail trader will look at it in this way. They will look at it as a break of structure. Okay, let's just illustrate this nice and clean so we can make a legitimate point here that everybody can understand. All right. If we're looking just from a retail perspective, okay, and again, we're talking about support and resistance, Fibonacci levels, this would be considered support. As price finds support here, finds again support here, it breaks through, and now it's finding resistance at that same area. And it's coinciding with the 61.8 Fibonacci level, which is a high probability area where retail traders like to sell. Instead of just waiting on a bearish engulfing, or waiting on a low time frame break of structure to try to get into the market, remember what we just spoke about. Consider that maybe as your BC. Okay, consider maybe your AR in this situation, so that now it'll provide a little bit more patience and a little bit more confluence instead of just entering on 61.8. Maybe you look at it as your BC, your AR, your ST. Maybe you're looking for the SOW. I'm following the schematic. I'm following it right here. The SOW, the sign of weakness. Again, look these up, guys. Price pushes up. You have your UT now. Okay, consolidation again. And then maybe your UTAD is actually what hits the 61.8. And then now, as price begins to descend, maybe now you can enter your position somewhere in this descending order flow with a lot more confidence, because you're not just waiting on 61.8 bearish engulfing or low time frame breaker structure. You're not doing what everybody else is doing. You're taking it a step higher, and more importantly, you're being more patient. Okay, so this can help eliminate a lot of losses, because most losses come when you get in too early. I don't even have to guess, but I know for a fact that the majority of the time you guys get in too early, price comes up, takes you out, and then goes your way anyway. That's just the way it works. And if you look at that, that could easily be price you getting in at UT or BC, price coming up and making a UTAD, taking you out, and then pushing to the downside. You see, so again, it doesn't matter your strategy or what you want to call your entry area, whether you want to call this, maybe this is, if we back it up a bit, what you're calling 61.8 and support turn resistance, maybe somebody else is calling this a 4-hour order block. It's the same thing. Maybe that's what they're calling it. That's their order block. It doesn't matter. It doesn't matter. What matters is when your zone gets hit and what you're going to do about it, and how you're going to avoid the manipulation and the frustration. So, that's just a tip for me on how to utilize schematics into your trading. Again, I encourage you to understand all these levels, and there's distribution schematics 1, 2, 3. There's also redistributions, which is just like the word suggests. If this is your distribution and price comes down, we call this the distribution, then price consolidates, and then continues down, this would be considered a redistribution. So, go learn those. Go start applying those to your trading. And again, you don't have to understand each one of these levels like a science project, but what you've got to understand is how to use them to your advantage. If you have an issue getting into the market prematurely, maybe you're getting in at BCs or UTs. Maybe you should start following a schematic and looking to get in at UTADs. In other words, waiting for all that to end, all that schematic and all that, that first phase A and phase B, phase C, let all that end and then look to get involved during phase D. Okay, and this is going to help your trading again. Doesn't matter how you trade. Okay, and this whole thing about if you get into the market right here, and you see us posting this stuff all the time, because like late entries is something that people think are wrong, which is so, I mean, it's stupid. Sorry to say that, but it's stupid, because there's no such thing as a late entry. Instead, it's a confirmed entry. Think about it. If you're anticipating price leaving this area and heading down south anyway, there's no difference if you get in right down here. Okay, this is a safer bet, because at least the part you were unsure about was where it will turn or not. That's actually taken place. So now that that's happened, instead of gambling on that happening, now that you know it's happened, now you can look to get involved in the market. Again, once this happens, now you can look to get involved in the market. Entries from here are not late. These are confirmed entries. This entry from the top, that's the gamble. When you take the screenshot and you call yourself a sniper because you got it right, that's not a sniper. That's a gambler. You had no confirmation. That's a gambler. That's not a sniper. Okay? Waiting for something to happen and then understanding it's now your time to get into the market, that's a sniper. That's what snipers do. Snipers don't take risky shots. They wait and they wait and they wait till they see everything they need to see, and then they pull the trigger. This is a gambler. This is not a sniper. This is a sniper. This is somebody who's patient and very observant and understands when it's their time to strike and gets involved when it shows that it's time to be involved. Okay, so a couple adjustments just like this, guys. Again, we're looking at a retail strategy right here. This could be a trend line. This could be an order block. It could be anything you want, but it's going to promote patience. And patience is by far a trader's best friend, and exposure is the enemy. So go ahead and try to incorporate this into your trading if you're not already using Wyckoff. Again, I don't tell you to build your entire career around it, but definitely use it. The more things you use, the better off you are. But you'll understand how to make it work for you. And even if it doesn't fit your trading, at least you know about it. You know what's going on. And knowledge is power. This is just going to increase your market IQ. And yeah, I hope you guys got some value out of this video. And of course, follow our Telegram. We're always posting new stuff. And yeah, we'll get to you soon. Talk soon. Thanks, guys.